All right, good morning, everyone. It is 8:43 in the morning of February the 3rd, 2022, and this is my pre-market strategy session. So what I have up right now is the SPX, and the SPX doesn't have any pre-market activity. This is just the 8-hour session that occurs. I should say, is that 7.5 hour session? I've forgotten. From 9:30 in the morning until 4 in the afternoon. That's what is that? 2.5 hours, 6.5 hour session. Anyway, so yeah, this is regular trading hours only here on the SPX, East Coast time. So, and you can see here's the long-term kind of movement on the SPX here from this is going back. Let's do this. Actually, let's put it on a weekly. I mean, here it is going back to 1978, 66, 52, so on and so on. This goes back to 74, and here's the S&P at $3 a share or so. And so yeah, here we have here it is, And it's definitely looking, on this time scale, the weekly time scale, this thing is definitely looking like it has gone parabolic here and is now prepared for the back end. Now, it's usually a process. It usually takes a little bit more time than it, just kind of going up and crashing back down again. What'll happen up here in this area is there'll be, a Wyckoff distribution, basically. But yeah, that's pretty much the future of the S&P right now. Is looking like it's gone parabolic, and now it's time for it to come back down and find support. Where's support going to be, and then move on. And this could be a multi-year process. I mean, it could be a really long time until we see this pattern resolve itself, where it finds support and so on and so on. Well, so for day trading purposes, let's go back here to the daily. I think really the best thing to do on this for right now, yesterday I put a Fibonacci that went from the high end of the 4th of January price to the bottom end of the 24th of January price. And this is what we wound up with. And then lo and behold, yesterday, so this is the famous 61.8 Fibonacci. And yesterday, it came up and tagged that and closed just below it on the SPY. Let's see where it closed yesterday on the S&P or on the SPX. Let's see. Yeah, closed just below it on the SPX too. The SPY and the SPX, the SPY is a proxy for the S&P. And now pre-market here, we are getting a rather significant pullback. So here is the close. Actually, let me see here. Yeah, there it is. So here's yesterday's close right here at the end of the day, this 1550 candle. And then as soon as it closed, as soon as the closing bell rang, the S&P just started selling off like crazy. You can see here. So, this is the E-mini S&P contract. And so it definitely found resistance right there at the 61.8 and is definitely pulling back. I mean, right now it's down 1% pre-market, down 1%, down 48 handles in the pre-market. On the SPY, let's see what that translates to. Yeah, down over $4 a share on the SPY, this is the spot. So this is the spot for it to turn around and start going the other way if it's going to be bearish. And so the next price for it to get below, the next thing for it to do is to get below this $420 mark right here. If it does that, if the SPY or if the S&P or whatever it is, starts closing below this right here, it's really quite possible to see this thing, crash down Another, let's see, 479 to 420. That's 50 points. So if it gets below this this spot right here at 420, let's see, 400 is in play. But roughly 400 on the SPY or 4,000 on the S&P is in play. So we'll see what happens, and I'm grateful that I have, Hedgeye. Keith McCulloch at Hedgeye has been calling this almost perfectly. He didn't foresee this big run up right here happening, this sort of relief rally right here happening, and I think there's been the largest net consensus long position was put on. I'm pretty sure it started right in here, and the people who've been conditioned to buy the dip came in and bought the dip, and that's retail. Like apparently a whole boatload of retail investors came in and just started buying right here. And apparently, the volume was massive. Well, so now, Wall Street, has its tricks, and so they're like, okay, well, let's let this thing run for a little bit, and now, it's getting sold into. So yeah, right now, if the S&P opened up right now, if the SPY opened up right now, it would open up just slightly above this 50% Fibonacci for this run. It would open up at 451.07, and the 50% Fibonacci on this leg right here is at 450.37. So we're only a matter of about 70 cents off of the 50% Fibonacci. Maybe we'll see a bounce there. Might be worth a trade. I tend to prefer to trade in the opposite direction. Or I'm sorry, not in the opposite direction. I prefer to trade in the same direction as the trend, and so I'll be looking for bearish setups. And it was tough to hold on. I started averaging into short positions right here on this day, on the 31st of January, and it's been kind of hard to hold on to those short positions that I've put on, but looks like it's getting ready to pay off. So. Yeah, I've been averaging in since the 31st of January. So I averaged into some short positions yesterday, the day before that, and then, of course, the 31st. So, and then otherwise, really, I don't play small caps anymore unless there's something like really big happening in the small caps because of the way Wall Street has put the brakes on small cap momentum trading. And then there are a whole bunch of large caps on the scanner today, but I've got on the daily here. I mean, these are the most traded stocks, and I'm not saying they're easy. Or so Tesla, Amazon, the Qs, and SPY. Those four so far have been, they're highly liquid. Their moves are exaggerated and they don't always respect the levels, but pulling trades off of these things, I'm not going to say it's easy, but I'm having a high rate of success on trading, in particular Tesla and Amazon. The Qs and the SPY, a little bit less reliable, but Tesla and Amazon so far have been really reliable. Sort of a little morning thing here happening. Look at this. Yesterday, actually, I was really close to pulling the trigger at the open yesterday, and I didn't. I wish I had. Here's the top end of the risk range at 31.24, and this thing opened yesterday at 31.01, 24 points away from my entry. Okay, I missed it, but here it is, on a short. But here it is at 2,800, just slightly lower than 2,900 this morning, the pre-market. That's a 4% down move in the pre-market. Tesla is getting a 3% move on the pre-market. So, ought to be a profitable day today, and I'm looking for bearish setups. So I'll be looking for these things to fill gaps, and then look for an opportunity at the gap, and so on. So that's pretty much my strategy for the day. It's going to be, just patiently waiting for the right setup to come along, and take advantage of the moves in this market. The moves are big. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.